Hello and welcome to another update video about Bitcoin. Middle of the day update here. Bitcoin continues to just move sideways. We're heading, however, into the, let's say, into the time on Sunday where typically you would start to get some volatility. Maybe not yet, but in a few hours when we get close to the weekly candle close. Often you see some movement on Sunday. Not always, but oftentimes. And I just wanted to highlight again just the short-term count again, but then we want to talk a little bit about risk management as well, and want to highlight the bearish count again, just to make everybody sensitive towards the topic. I don't think I'm bearish, I'm bullish. Yeah, we focus here very clearly on the trend. I know there are some perma bears out there. That's pointless because we always want to be flexible enough to change our perspective. We will have to change our perspective if Bitcoin loses the 29,130 level there, which is the 50% Fibonacci retracement, because this fourth wave should not drop below that level. Now, if it does, it would not necessarily be bearish straight away. We will have some further lower support areas around 28.5K is one. But obviously, ideally, it's just going to carry on. What I don't like about this chart, and I was very clear about this, is the quantity of 1-2 setups in this most bullish interpretation. There are just too many of them. I mean, it's not invalid, but it just is, you know, when you have too many 1-2 setups and the price hasn't really gone to the moon already, then it's always a bit questionable. And that just gives me a bit of a headache, yeah, and a bad feeling about the chart. Again, which doesn't mean it has to come down now, but it just means that, right, you know, I'm a person that might not want to add more positions personally. I'm not adding any more to my Bitcoin position here because I bought enough in the bear market. Well, we might still be in the bear market, and I just let it run now. Yeah, I'm equipped. The thing is that obviously now risk increases and we could be in a third wave rally. Now, I personally don't add to my positions typically not in third wave rallies. But then there will always be pullbacks where people can do it, right? It's just talking about me personally. But for me, it's more like, you know, price has doubled since November. I bought on the day when FTX crashed. I did post it on Telegram at the time. It was here somewhere. I remember I was actually in the car on the day and I bought. So this position is like 100% in profit, right? And I added some other positions along the way. You'll know that on the 10th of March, all these nice dips that, you know, Elliott Wave gives us these nice parameters where we can just trade, enter positions, and we know our risk. And I prefer to use the low risk, high reward setups. And not everybody does. You know, some people like to just trade breakouts, and that's fine as well. It's just a different way of doing things. But I explained that to you because I just want to emphasize that markets can do anything. Okay, markets can do anything. It's probabilistic in nature, and the technical analysis doesn't tell us what definitely is going to happen tomorrow, but it gives us the parameters against which we can trade, and the parameters that, if broken, we know that the wave count has to change and we have to change our perspective. So that differentiates trading from gambling, because when I gamble, even, you know, you can call, you know, buying and selling certain altcoins gambling if you have no idea what you're doing. But when you have your clear parameters, and that's exactly what I do, you know, I trade low risk, high reward setups, and the analysis gives me those parameters against which I can trade. They allow me to do my risk management. So I trade, I don't gamble. And now obviously risk management is always in my mind, you know, as you can only really be successful in this game if you acknowledge that the market can really do anything. It's a probabilistic mindset. It's an uncertainty mindset. It allows you to stay humble. It allows you to not get emotional when you make a good or a bad decision, and it keeps you, you know, grounded basically. And that perspective allows you to switch your perspective very quickly should the market do something which is improbable, unexpected. Now, I would never say unexpected, because typically when you have fallback scenarios, you always have a plan. But what I want to emphasize here, that because risk management is always in my mind, I always think about it. And when the price has moved 100%, yeah, for some people it might be reasonable to take some profits in this region. Now, I'm not saying you have to, I'm not saying you do, and I'm not telling you to sell or anything. I need to be very clear with that. And I also need to be careful not to emphasize the risk too much, because then the nervous ones among the viewership will tell me that I told you to sell, which is not the case. All I'm doing is I talk about risk management, which is one of the most important disciplines in trading. Yeah, I'm only talking about reducing risk. Now, what that means for everybody individually, I can't tell you. But for me, it's like when something has moved 100%, it might be worth taking some risk off, because if prices drop another 20-30% from here, which they certainly could if we lose support, I'm not saying we will, but it could, then I don't want to lose all these profits again, right? So again, that's something everybody needs to decide for themselves. I just want to emphasize here that price action isn't perfect. It's a bit choppy, and you see all these 1-2, so it's poor price action actually. The setups are there, yeah, and price did move, but I want to see further price movements. I want to see it escalate really with these setups. So yeah, reviewing across the market, we see choppy setups everywhere. It's market should have moved by now. So I start to bring that up, because the longer these sideways movements take, especially in the altcoin sector, I think it will at some point reduce probabilities that we will rally at some point. But very clearly here, as long as we're holding support, I'm bullish. I remain focused on the upside. But I just want to emphasize, and not enough people talk about risk management, okay? So capital preservation, very important. As a trader, you need to pay yourself at some point. And it's just, but what that means is individual for everybody, because some people invest for the long term, some people trade the short term. So hopefully that makes sense. Because obviously we are now getting to a point where ideally it starts to rally. But if it doesn't and breaks support, we can get a deeper setback. Now that deeper setback doesn't need to be bearish. It doesn't need to. So in the very short term, I have no issues, other than these 1-2 setups, which I don't like because there are too many of them. I'm happy, it's just moving in the direction we wanted it to do. For the last couple of months, we haven't talked about anything different than rising prices. It was the correct decision to basically ignore the bearish setup for now, and especially the 10th of March provided a turning point, and prices basically rallied like 40% off the 10th of March low, which is fantastic and has been in accordance to the analysis here. This was a bit too slow, a bit too choppy for me, but it still moved in the desired direction. And now we've got this 29,130 level as support. And as long as that's holding, we focus on the upside, and the next target is around the 32.5 to 32.8K level. We are currently moving here in this wave 4, in my opinion. We had an A wave to the downside, possibly here a B wave triangle, which could be finished shortly. At the moment, it looks rather like a B wave triangle, yeah, which could break to the downside, and then a C wave down. So I would be ready for that, because not only have we an Elliott Wave triangle, but we have actually a proper triangle here where price is moving into the apex of something. Now, if we add the subwave structure count, this could tell you, okay, we've got something like that, and we could be ready for a breakout to the downside. Now, I'm not saying we will, but if we see trendline break, this is the trigger. Yeah. Trouble is, this could also be a triangle that opens in the other way around. But that's why it's so important just to know, okay, we are probably in a correction. As long as we're holding 29,130, the trend is further up. Okay, so we focus generally on the upside. And as long as support levels are holding, we should treat them like that. So that's about that. What could we expect in terms of pullbacks if we get them? So first of all, I'm going to take out those previous swing, support levels, because they are not really relevant anymore with the latest highs. So I'm going to take them out. Don't need those deep structures anymore, support levels. I will add support levels if needed. At the moment, there are different options. So what could happen is that, yes, we are in a third wave rally. That would be my expectation anyway at the moment. But if my assumption is wrong here, and we didn't have a 1-2-1-2 setup, or a large one and a shallow 2, then what could be, and I don't like that count, it's for me not a probable one, but it is possible to count it in a different way. I can say that we had this as a wave 1, this as a wave 2, we had a short third wave, which is possible. This was a fourth wave as a triangle to avoid an overlap with wave 1, and now here a wave 5. This is possible, maybe even as an ugly diagonal. It's possible. And then this would be only the first wave of a larger third wave, and we have the risk that we come down in a deeper pullback in a wave 2. That's just the risk I'm talking about here at the moment. And it could take us into the 23, 24K region, would still be bullish, but a deeper pullback in a bullish scenario. And I feel it's time to talk about these scenarios now. We've been focused entirely on the upside over the last few weeks and months. But now that we've seen all these moves play out, it's time to get cautious, in my opinion, okay? Not panicking, but considering risk management. And I need to highlight these alternative scenarios. So from here, we could still rally in the third wave. Now that would be probably my next scenario if we lose the 29,130 level. It wouldn't be bearish, very clearly, but it would just mean a deeper pullback, and price could come down from there, you know, let's talk about it, around about 20%. So that's one point. And if we hold then support that, you know, I'm not going to be bearish on Bitcoin until we break below 17.5K, because until we go, because there will be other bullish scenarios that I can use before, but below 17.5K, I'm going to turn bearish. And I showed you the real bearish count in one of the previous videos, just to show that as well. Maybe again, just briefly. And it is on the log chart, but that's purely because it's just on there. I don't have a chart for every scenario. So, but from the all-time high in this scenario, we would say we came down in an A wave. This now is a B wave, and we come down in a C wave. And even in this scenario, where we could make a new low afterwards, we have subwave structure where this might have been an A wave top, we come down in B and rally in C. But that's very similar to the 1-2 setup that I just showed you with a deeper pullback. So I wouldn't try to, I wouldn't panic. I would just, you know, trade my plan if I were you and just consider risk management. But taking profits along the way means that if I take profits for myself, you know, I'm not getting emotional if the price continues to move. It's just part of the game, right? And that's why I would also not take all profits, you know, take some profits. Yesterday I closed, for example, my GMX grid bot because it's reached the top of the range. It's made some profits. So for me, it's like, even though I forecast it should go up higher, for me, it's risk management. It's like, it's made nice profits. I don't want to lose them all again. So I'm looking for the next high reward, low risk setup. But yeah, that's sort of the situation with Bitcoin at the moment. I remain focused on the upside, and I see price action at the moment in a similar way to where we were in May 21, yeah, where we had decent upside potential. It was ugly. It didn't reach like 100K, but it still made a decent rally. So similar here, it's a bit ugly price action. Ethereum looks better. It's a bit ugly. It can reach high levels. It doesn't necessarily need to go to, let's say, 100K from here, but it could still rally higher and make a decent rally. But along the way, we always need to be cautious. Yeah, that's just part of the game, really. But yeah, that's sort of where we are. And at the moment, there is, for me, no change to the plan. But while things are a bit boring in the market, just sideways, obviously, you know, we want to take the time to talk a little bit about risk management. I want to share my thoughts. Then you can just use that for food for thought, right? Because everybody's in an individual situation now. I would never tell anyone to sell or take profits because everybody's got their own plan, right? And there is much more to trading than just a chart. Okay, that's my update about Bitcoin. I hope you like the update. Very important today, 5 p.m. UTC, which is in roughly a couple of hours. We have our member live stream again. Today we are going to analyze a chart from scratch. It's a bit of an educational live stream, the member live stream. We do that on a weekly basis. There's always another educational topic. So if you're interested in that, check out the channel membership. You can always watch the recordings as well if you're interested. But besides that, hope you have a great day. Hope you like the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.